Thank you for attending the financial results briefing for LIFULL for the fiscal year ended September 30th, 2023. First, I would like to introduce our attendees. Joining us in person are President and CEO Inoue, Director and Managing Officer Ito, and Managing Officer Fukuzawa. Participating online are Director and Managing Officer Yamada and Managing Officers Hada, Kawasaki, and Nagasawa. Good morning. My name is Inoue, and I am the President and CEO of the LIFULL Group. Thank you for joining us today. We have several things on our agenda for today, but I would like to start with a brief summary. For the fiscal year ended September 30th, 2023, we achieved an increase in both revenue and profit, and I will give you more details about our steady growth throughout the presentation. We ended the year without reaching our revenue and operating profit targets, but we are concentrating on growing our core businesses and closing or exiting non-core businesses. As a result, our overall business has become leaner with a more direct focus. This is a very positive aspect. On the other hand, as I will explain in more detail later, the main reason for the large underachievement of operating profit was due to our overseas business. We have various overseas businesses, including real estate portals around the world and tech-enabled agents, a business focusing around using technology and the internet to close more real estate deals. Although this business is performing better than expected, the aggregation business, which was originally a cash cow with an EBITDA margin of more than 30%, is underperforming. This has been dragging the overall business down, so our most pressing issue right now is leveraging the aggregation side of our overseas businesses. Other than that, we are making very good progress as planned. In this sense, although we have not achieved our original financial targets, I am pleased to report that we are changing our business structure and are now more robust in terms of content. With that in mind, I will explain how we expand our major businesses through selective focus. First of all, I would like to walk you through our financial results. Profitability improved dramatically due to the success of our selective focus on core businesses. Operating revenue increased by 17.2%. However, we fell short of our original business target because of the poor performance of some of our overseas businesses. In the domestic home services business, we're making great progress with our investments to further develop the LIFULL Homes website. This is reflected in our increased revenues due to the strong performance in resale property listings, appraisal inquiries, and our face-to-face consultation service. We were also able to increase profits by optimizing ad spend for LIFULL Homes. Overseas, our aggregation sites are struggling, resulting in a significant decrease in profit. In contrast, the real estate portals we operate and tech-enabled agent business, which we acquired this year, are outperforming on our original expectations. In the other businesses segment, we had been managing a regional revitalization fund of about 1 billion yen for several years. This year, though, some of the investments of this fund had matured and were ready to be sold for a solid gain. On the other hand, LIFULL Senior, our portal for searching for care facilities for elderly people, is now in an investment phase to expand revenue and earnings by investing heavily in advertising and publicity. This is the simplified statement of income and loss. New overseas acquisitions and the Regional Revitalization Fund have contributed to the increase in revenue. The top-line figures show an increase of 1.9%, but excluding the revenue from the sold businesses in the previous fiscal year, the increase was 15% on a like-by-like basis. The second footnote is talking about a one-off increase due to the sale of development projects by the Regional Revitalization Fund. The sale of LIFULL Marketing Partners in the previous fiscal year resulted in a decrease in the cost of revenue, which in turn led to an improvement in profit margins. The third footnote is the planned optimization of homes promotion expenses, which have been significantly reduced and contributed to earnings. The fourth footnote talks about the sale of LMP and Fasciola in the previous fiscal year and the dissolution and sale of shares of the joint venture Rakuten LIFULL Stay. In addition, Fazwas, a real estate portal and tech-enabled agent in Thailand, saw a significant decrease due to an additional booking of a planned earnout payment. In monetary terms, approximately 750 million yen is the increase in expenses due to the earnout. To give you a little more color, the business is outperforming our original expectations, so we have adjusted the performance-based earnout to reflect our current understanding of the business. This is a positive indicator for the overseas business. Next, I would like to show you revenue by segment. Excluding the impact of the sale of LMP in the previous fiscal year, revenue for the home services segment increased by 2.7% YOY. Also, in addition to our gains in revenue, we returned ad spend to the same levels of 2 years ago. Overseas, as I explained, our new acquisitions are performing well, while, on the other hand, the aggregation sites are underperforming. For detailed figures, please refer to the remarks in the profit and loss statements. Excluding revenue from Fasciola in the previous fiscal year, revenue for the overseas segment increased 30.3%. In addition, we made conservative revisions to the revenue recognition policy for Fazwas, which has been growing steadily and exceeded our original forecasts. Originally, revenue recorded for Fazwas included a standard cancellation rate, and revenue was canceled when transactions were not completed. However, we have decided to recognize only revenue for completed transactions. This policy change resulted in a decrease of about 400 million yen in previously reported revenue. Regarding the other businesses segment, the increase in revenue was primarily due to the sale of development projects by the Regional Revitalization Fund. Profit and loss for each segment is as follows. For home services, 2.6 billion yen, about 2.3 billion yen more than in the previous period. This is due to an increase in revenue and optimization of advertising expenses. In the previous fiscal year, we sold LMP, our advertising agency. So as you can see, revenue for home services amounted to 23 billion yen, generating profits of 2.6 billion yen, which is a profit margin of about 11.4% compared to the previous fiscal year. Overseas, profit decreased mainly due to decreased revenue from aggregation sites and increased personnel expenses. In terms of quarterly trends, we returned to profitability in Q2 and have maintained profitability in Q3 and Q4. There was also a negative impact of 180 million yen on profit in Q4 due to the impact from the conservative change in the revenue recognition policy for Fazwas. As I mentioned at the beginning of this presentation, we have been focusing on our core businesses as a whole. I will explain the details of leveraging the overseas aggregation business in the section on changes in our management structure to be explained later. For your information, in terms of revenue by segment, excluding LMP, sales revenue increased by 2.7%. The overseas business is up 30%, excluding revenue from Fasciola. Other businesses also grew by 7.4%, even excluding sales from the sale of the Regional Revitalization Fund projects. Similarly, excluding special and one-off factors, the home services segment posted a 344% increase in profit, while the overseas business posted a disappointing 98.6% decline. The other businesses segment was virtually the same. Although the amount is small, we're making steady progress towards turning the regional revitalization business into a profitable business, and we're on track. So I hope that you can expect this business to become profitable in the future. As for dividends, there are many bumps in the road. But as shown on the right, we're planning a dividend of 4.26 yen per share. Although the dividend payout is 53.1%, there is no particular change from our past dividend policy. Basically, the dividend payout ratio is targeted at 25%, from which we remove special factors and non-reoccurring factors, as mentioned in the previous section, such as a decrease in the tax expenses due to the reversal of losses carried forward from the reorganization of overseas subsidiaries and the cost of the earnout for Fazwas, which has been calculated as part of the resource for dividends. This resulted in a dividend payout of 4.26 yen, or a payout ratio of 53%. Next is the statement of financial position and goodwill. Goodwill increased by 5.5 billion yen due to overseas M&A and exchange rate fluctuations. Current assets decreased due to the sale of investments by the Regional Revitalization Fund, while current liabilities decreased to the repayment of loans. I will not go into details, but in terms of total liabilities, we have repaid approximately 3 billion yen in debt, resulting in total equity of 32.6 billion yen. Next, I would like to take a look at our cash flow statement. Operating cash flow increased by 6.2 billion yen, mainly due to increased profit. Cash flow from investing activities decreased by 1.7 billion yen, mainly due to the real estate loan business and overseas acquisitions. Financing cash flow decreased by 5 billion yen, mainly due to the repayment of loans. As a result, cash and cash equivalents at the end of the fiscal year were 16.5 billion yen, almost unchanged from the previous fiscal year. The overseas business remains a challenge, but as I will explain in detail, we are promoting a moving to direct strategy, or moving closer to the real estate markets and transactions themselves, and revenue is up 17% on a local currency basis YOY. As you can see in the 3-column chart at the bottom of the page, premium advertising, which is the so-called aggregation business or CPC, pay-per-click part of the business, originally had very high earnings. Due to changes in Google's ad display policies, the amount of space for ads on the first view or the first screen without scrolling has increased dramatically. As a result of these changes, the number of clicks from organic traffic is on the decline worldwide. Another factor is that the real estate portals, our clients, have reduced their budgets during the past year due to the uncertain outlook of the global economy. On the other hand, third-party advertising products offered through our sites, such as Google AdSense, have bottomed out and are increasing 31% YOY, but still fell short of the original target. I will explain the countermeasures for this later. On the other hand, as our real estate portals have grown, online subscriptions exceeded expectations and the initial plan with a YOY increase of 116%. The acquisition of Lumudi, which has not been included in the original plan, also had a positive impact. In the future, we will take measures to improve the price per click for our aggregation sites and ARPA, average revenue per agent, for our portals. The tech-enabled agent business at the bottom of this page is often referred to as an online agency, and we have coined the term DX agent to refer to using advanced technology to increase the number of transactions. This too has exceeded our original plans. Here, you can see an illustration of what I'm talking about. This page shows why we are implementing the moving to direct strategy. As you can see in the funnel on the left, users search on Google and other sites, find an aggregation site or portal, search for property, make a decision, and finally sign a contract. The individual services move closer to the actual transactions the farther down you go. For our businesses, we divide these steps into aggregation, portals, and the tech-enabled agents. The lower you go, the richer the information that is being provided. In terms of the prices, clicks on aggregation sites only cost a few yen. However, the amount per listing on a portal site can be a few to tens of thousands of yen, depending on the type of property or business model. However, when a deal is finalized, agents receive a commission amounting up to several 100,000 yen, depending on the country and property. So, the difference between all of these different steps is enormous. In terms of client numbers, aggregation sites work with the portals. However, there are only about 5 to 6 major portals in any given country, or in some countries, only 2 or 3. Our overseas subsidiary, LIFULL Connect, is the result of the merger of Trovit, Michula, Nestoria, and Neuroa. some of the largest aggregation sites in the world, and we are trying to find ways to reinvigorate these sites. The bottom of the page, on the other hand, is where we are currently trying to make the most progress. We have acquired Lamudi and Fazwaz, which I mentioned earlier, and they are growing significantly above our original expectations, so we will continue to promote this strategy even more strongly. As you can see on the next page, over the years, the ratio of revenue from the portal business and the real estate transactions have increased significantly. This has resulted in an overall growth of 14% and 26% respectively for the entire overseas segment, and we are now evolving into a more productive portfolio. Our customer base is expected to grow from 3,500 companies in 2022 to approximately 6,000 in the next fiscal year, and we aim to exceed over 10,000 companies in the current fiscal year, and we will continue to grow even more moving forward. As the first pillar of our growth strategy, we will further strengthen the tech-enabled agent side of the business. By combining the large volume of traffic from Dot Property, a subsidiary of LIFULL Connect, with property information from Fazwaz, we've seen a significant increase in the number of inquiries to Fazwaz properties through this process. In the future, we plan to increase the number of Fazwaz agents and improve the efficiency of our operations, thereby increasing the number of deals we close and the closing rate, while also aiming for an 85% increase in revenue YOY, or almost double. In addition, there may be some concern that increasing the number of agents will increase fixed personnel costs, but this will be a variable cost since the agents will be compensated on a performance basis. Our real estate portals are also growing faster than expected through acquisitions. Over the last several years, we have strengthened our sales force in Latin America through the acquisitions of Lamudi and Properati, and we plan to increase the number of customers by approximately 20% over the previous year and to raise ARPA to achieve a 37% increase in revenue. Third, we will be growing our teams for the aggregation sites. Since organic traffic is out of our control, we will strengthen our development and sales teams to improve the conversion rate and cost per click. Even if we can increase the price per click from a few yen to say 10 yen per click, revenue will more than double, and that is where we want to focus our efforts. We are also making changes to the management structure of the overseas businesses, which are described on page 39. Next, I would like to continue on to the home services business. We have been using this slide in our last several presentations, but we believe that the ultimate value we provide is to help close deals. So we aim to provide products that have a higher probability of closing deals based on the type of inquiry and traffic. On the left, you can see the conventional moving funnel. For example, let's assume that you have 100 exposures to the website. The conversion rate continuously drops as users move down the funnel. So having one deal completed out of 100 deals would give us a conversion rate of 1%. The right side shows our goals. We want to create a collection of services where even if the total number of users were 80, this would still result in 3 to 4 sales for our clients. This is also linked to the efficiency of the real estate agents. Agents have to respond to every inquiry they receive, no matter what the quality is. Agents respond through phone calls and answering questions via email or chat. If users want to view properties, it takes a lot of time and effort for agents to prepare and conduct those viewings. But even after all of this work, users can always back out of a deal. So we expect that limiting the numbers of inquiries going to agents to those with the highest conversion potential will result in more efficiency for the agents themselves. Looking back at the last fiscal year, we have placed our highest priority on increasing the value provided by LIFULL Homes. While the number of people moving in Japan has not continued to increase, we have still managed to maintain the number of inquiries while optimizing advertising expenses in this business environment. At the bottom of the page, you can see that we are continuing to develop site functions and features to improve the likelihood that an inquiry will translate into a sale for our clients. As a result, we are implementing AI technology and have obtained a patent for our nice-to-have search features. In the past, portals only provided must criteria, but we have now added a maybe feature to give users more flexibility. In the second point on the page, the improvement of advertising efficiency is a result of hard work of our internal staff. Although the budget for branding was cut by about 60% compared to the previous year, we were able to maintain traffic and the number of inquiries, which I believe was the result of the hard work of our employees. The real estate market and the real estate environment have not been good, with a slight decrease in the number of people moving and an increase in the price of condominiums. However, we have been able to grow despite these circumstances. As a result, segment revenue was 23.1 billion yen, and segment profit was 2.6 billion yen, up 2.7% and 657% respectively YOY. Our strategy for the future remains the same, to increase revenue and improve profitability in preparation for the final year of our midterm management plan, 2025. To this end, we will increase development resources and sales personnel. As I mentioned earlier on the last slide, we will continue to secure development resources to further invest in the improvement of our services. We will enhance the accuracy of personalization by strengthening the accuracy of our recommendations for each individual and for our client real estate professionals with options to help them work better with users. In addition, we have a team dedicated to fully utilizing generative AI, and we are releasing services one after another. The examples shown here are just a few, and we are still improving operational efficiency and personalizing services for users by using generative AI, so you can expect more growth here in the future. The second part of our growth strategy is to strengthen sales initiatives. We have been investing in development and improving the likelihood that an inquiry from LIFULL Homes will translate into a sale for our clients. As a result, as shown in the upper right-hand side of the slide, several major real estate companies with multiple offices have seen significant increases in the closing rate for users from LIFULL Homes. The closing rate has risen by approximately 10%, and this has led to an increase in overall transactions for our clients. We will strengthen our sales force in order to expand the number of members of LIFULL Homes and substantially increase profitability of the service overall. I would now like to explain a little about the change in our reporting segments. As an overview of the changes in the segments, the dotted line on the left shows LIFULL Tech Vietnam and LIFULL Tech Malaysia, which are offshore development bases of ours. Although sales are minor, these offshore development bases are almost entirely focused on developments for LIFULL Homes. We plan to continue to follow this policy in the future, and thus, we have changed the Homes segment to match the actual situation. As a result, we will incorporate these businesses into the Home Services segment. Consequently, for the fiscal year ending September 30th, 2024, we are projecting a net revenue of 37 billion yen and operating profit of 3 billion yen. Please allow me to give you more information about the footnotes on the right-hand side of the slide. The sale of LIFULL Space, which was resolved in October, is scheduled to be finalized at the end of February, and the gain of 850 million yen from the sales of shares is included in this figure. As a supplementary note, we are assuming an exchange rate of 149 yen against the euro. Here you can see our midterm management plan through the fiscal year ending September 30th, 2025. There are no particular changes to this plan. We will expand revenue and profit while focusing on our main businesses, aiming to achieve our targets. We would like to improve revenue growth by approximately 2 percentage points each year. In the past 2 fiscal years, we have already achieved 1.9% and 1.6% growth rates. But we need to raise these figures by 1 more percentage point, so we would like to switch to a more robust management style. One of the main reasons for this is to leverage our overseas aggregation business. Operating profit was 1.9 billion yen in the fiscal year ending September 30th, 2023, and projected to be 3 billion yen in the current fiscal year, and more than 5 billion yen in the year ending September 30th, 2025. The trigger for our employee stock option is achieving an operating profit of 5 billion yen in the fiscal year ending September 30th, 2025 on a consolidated group basis. On a non-consolidated basis, we are aiming for a profit of 3 billion yen, so the entire company will work together to achieve this goal. We will also be strengthening our efforts in the area of real estate investment. As you can see on page 32, we've been building a platform in the real estate investment field. These include the abundant amount of property data held by the group, our network of real estate professionals, and Web 3.0 technology, which includes STOs and NFTs. We've been working to build a platform that allows anyone to easily invest in real estate. In the middle is the real estate crowdfunding system, which allows investors to invest in small lots in accordance with the specific laws on small lot real estate investment. Similarly, LIFULL Investment deals with investments and loans related to so-called joint venture real estate investments. On the right side, LIFULL Investment handles financing and loans for regional revitalization projects. In addition, we have invested in Hashdash in the past to use security tokens for real estate investment initiatives. In the future, we will establish a new subsidiary that will be in charge of the financial business in order to further strengthen our structure in this area. This subsidiary is scheduled to be established today. In order to achieve global expansion and create a marketplace for secondary trading, we would like to have Mr. Tetsuro Shimizu, who possesses a wealth of financial knowledge and experience, as the company's representative. His profile is described in detail on our website. As you can see, he has served in many different positions, including as president and CEO of the Long-Term Credit Bank of Japan, Seven Bank, Rakuten Group, Rakuten ED, Shinsei Bank, and Shinsei Financial, and is currently managing executive officer of the Monex Group, as well as a current member of our board of directors. Thus, there is no one more suitable for this position, so we are seeking his appointment. We believe that the potential of real estate and NFT is enormous. As you probably know, NFTs are based on blockchain technology, meaning that they cannot be easily replicated. Therefore, it is difficult to falsify information. NFTs can be embedded with different types of information, so we believe developing various products such as NFTs with special rights or NFTs with membership rights could be possible. As mentioned on the right side, in the current market, REITs have been the main product on various markets. However, REITs are inevitably expensive to form, so there has been a strong tendency for them to be limited to large properties in central Tokyo. However, with the evolution of various technologies, it has become easier to liquidate smaller lots using security and non-fungible tokens, with the new products being released over the last year. For example, resort memberships, share house usage rights, accommodation rights, ownership rights, and various other memberships are all very easy to design and have extremely low structuring costs, so we believe that there are great opportunities here. Therefore, in addition to the organizational chart shown earlier, we will establish a new company called LIFULL Financial, which will be a new initiative in the area of real estate and NFTs, as shown on the far right in the orange box. Using NFTs has the advantage that it is easier to expand the business globally without running the risk of violating each country's financial and commercial laws. So we would like to explore NFTs as a pillar for international growth. Finally, I would like to inform you of a change in our management structure. We would like to appoint one additional representative director. The appointment will be made by resolution at the Board of Directors meeting to be held after the year-end shareholders meeting on December 21st. I am the founding owner of the company, and I've already served as president and CEO for 28 years. But here, I want to further strengthen the management and governance of the group through a double leadership structure and pave the way for the next generation. Our businesses have been expanding very rapidly. We now have 37 group companies, or 50 businesses in total. So we will divide management between the two of us. Moving forward, I will be passing on more of the business to new president Ito as we work to increase the overall strength of the group as a whole. I myself am still young, but while I am still young and healthy, I would like to smoothly expand our business while creating a succession plan. As a result, we would like to become a corporate group that will last for 50 or even 100 years. Yuji Ito joined our company as a new graduate, and for the past 14 years, he has been responsible for the expansion of LIFULL Homes and the launch of new businesses. He has been a driving force behind our core businesses. He is now 40 years old, so we will have a very rejuvenated management structure. For more information and details about Mr. Ito's background, please refer to our IR website. One more item I would like to mention is our change in the full-time corporate auditors. We have selected Ms. Shoko Osumi from within the company to be our new full-time corporate auditor. She joined the company in 2008 and has served as the head and general manager of the internal audit and internal control departments. On the other hand, as a candidate for director, Mr. Kiyoshi Shishido, who is currently our full-time auditor, will be reassigned to a different position and mainly be responsible for our overseas businesses. In terms of profile, Mr. Shishido has held senior management and representative director positions at a number of affiliated companies of the Mitsubishi Corporation. So he has very valuable experience in management, global technology, legal affairs, risk management, and M&A. On the next slide, we have an overall diagram for the new management structure of the LIFULL Group, and the stars indicate the appointments scheduled for December. I will become the chairperson of the board and will manage and supervise the governance and execution of the entire group. Furthermore, Yuji Ito will be responsible for the domestic business in general, excluding finance, and Kiyoshi Shishido, who will be newly appointed to the overseas business, will be responsible for the recovery of profitability overseas. Also, the president of the newly established financial subsidiary, Tetsuro Shimizu, has been appointed as a director of LIFULL, and he will assume the subsidiary's management. Mr. Takashi Yamada, in charge of technology, will remain unchanged. This concludes my presentation. Thank you for your attention. Question. I have two questions. My first question is that in recent financial results, advertising costs for the home services segment were reduced by 57% as a result of optimization of branding efforts. Specifically, I would like to know what you did to continue to attract users, what kind of AI you used, and conversely, if there is any system to supplement your property advertisements. My second question is about page 32. In the real estate investment area, there are various things here that you could be doing to strengthen the group, including finance in the future. For example, what is the current profit and loss of the business scale of your current businesses? There are other listed companies specialized in the same field. One of them works very similarly to Kembia. I believe this company is making about 1.1 billion yen in operating profit annually. However, I think your business works a little differently, and I would appreciate it if you could explain the current situation and this potential, including the level of profits. Answer. Ito. Regarding your question about the review of advertising expenses. In the last fiscal year, we had a year of structural reform aiming to increase profitability. As a company, we have spent a certain amount on advertising every year. But we reviewed our TV commercials and mainly other branding expenses and have reduced them considerably to around levels from about 2 years ago. However, we did not just cut back. We also allocated more of our budget to social networking sites, such as YouTube, which is expected to be more effective, and we have been accumulating knowledge in this area. We were able to produce a few videos that became quite popular and even produced some hits. These helped us to maintain brand recognition, traffic, and the number of inquiries generated through LIFULL Homes at about the same levels as the year before. We will continue to utilize this knowledge in the current fiscal year and beyond to further sharpen our skills. Answer. Kawasaki. As Ito mentioned, we are systematically promoting the optimization of our operations. Specifically, we scientifically verify how, when, to whom, and where to approach while selecting appealing content and specific media. For example, in the case of our TV commercials, we are using Haruna Kawaguchi as the main character in It's a Waste If You Don't Look at Homes. We are taking the approach of appealing to people who are using homes in conjunction with other services and are implementing communications that will stimulate them to take action. Also, on YouTube last year, we released a video featuring President Kimura of Sushi Zanmai during the first auction of the year, and it generated a huge buzz with over 18 million views on YouTube. We are working with a 60% lower budget compared to the previous year, but the results were still very good. Answer: Inoue. To add one more point, the creative team led by Mr. Kawasaki, the promotion team, and the marketing teams are all thinking about how to maximize this project's effect, even with a smaller budget, and this is the result of our daily thinking processes. As for your second question, Mr. Fukuzawa, our CFO, will answer, including the profit level of the financial businesses. Answer: Fukuzawa. This is a question related to the real estate investment field. As you mentioned, there are some real estate investment related companies listed on the stock exchange. As you are probably aware, we merged our system with Kembia in April of this year, and our policy is to aim for the number one position in investment real estate listings. The business itself was originally several hundred million yen in scale, with an operating profit margin of over 20% and a highly profitable structure. In order to expand the scale of the business, our policy is to maintain and increase profits. Regarding LIFULL investment, in the previous fiscal year, the Regional Revitalization Fund sold some of its previous investments at about 10% in profit, so profitability is taking a positive trend. Our new business will be included along with these other endeavors. Although it's not a large investment, we will continue to make investments within the scope of the current positive operating profit for this segment. Question: On page 6, you mentioned the change in the revenue recognition policy for FASWAs, and this resulted in an adjustment of 400 million yen in revenue and 180 million yen in profit. It was written that this was for Q4 in the presentation, but is this for the quarter or for the full year? Answer: Fukuzawa. The change in our accounting standards here is that up to Q3 of the previous fiscal year, the old accounting standards were used for recording, and this was revised in Q4 for the full year. The new accounting standards have already been applied for the current fiscal year, so there are no more negative factors for this year. Question: A few companies have been affected by the changes in Google's algorithm. But when you talked about conversion rates in your earlier explanation, do you mean actions taken in response to the algorithm changes specifically, or do you mean to avoid being affected by them altogether? Answer: Inoue. The changes in the algorithm, or the amount of ads on each page, has resulted in a decrease in organic incoming traffic, which means that a decrease in user traffic overall at its very source. Even if the volume of organic traffic should decrease, we are talking about increasing the final conversion rate for our clients by improving how our site works overall. So even if the incoming traffic or the incoming traffic volume is less than before, if there are fewer leaks, we'll be able to accumulate more conversions in the end. We refer to this as completing deals. So the change in the algorithm is talking about the amount of traffic that comes in, and we want to make sure that we are closing any leaks by modifying our systems, the site, and usability overall. Question: From the point of view of those who use your site, do you feel things are changing gradually, little by little? Or will there be a big site renewal sometime in the current fiscal year, in August or September of 2024? Answer: Inoue. It's already changing almost daily. We are constantly tuning the systems. However, we might also make bigger changes every few years. In the industry, we call this A/B testing, and we are constantly looking at all of the data we have on which user is looking at screen A and which user is looking at screen B, and seeing which one sticks and is easier for the user to use. We do this daily, developing an all-encompassing global unification of the winning side. Question: Is LIFULL Financial in a situation where you can place some kind of figures like revenue or profit from that in your forecast for this fiscal year? Answer: Inoue. LIFULL Financial is not yet projecting much sales for the fiscal year. We are currently not including revenues in our earnings forecast, since our approach for this term is to first do a feasibility study of the market using this NFT. I will assume the position of Representative Director and President in December. As Inoue briefly mentioned in my profile earlier, I've been consistently involved on the front lines of the homes business for about 18 years since I joined the company as a new graduate in 2006. Of course, I know homes better than anyone else, and I have also provided my own input on other businesses through board meetings and internal management meetings over the last 3 years. What is expected is, of course, an improvement in performance and business growth, and we will take immediate measures to achieve these goals. I expect to have more opportunities to meet with you at financial results announcements and other events, so I would like to ask you for your cooperation. This time, not only I, but also in the context of strengthening the board of directors, as mentioned earlier about the overseas and financial affairs, I hope that you will have high expectations for the next management structure. I look forward to your continued support. Final remarks, Inoue. As I mentioned at the beginning, we have almost completed the liquidation of various non-core businesses and have finished strengthening our core businesses. From here, we will make further investments to boost the top line and expand earnings. I am convinced that the real estate finance business is a very large market among many. Now that we have established a structure for this area, I hope that you will look forward to our future growth. Also, we are rejuvenating our management structure and have strengthened our board of directors as such. In this regard, I look forward to showing you the impact of this change on our business performance in the current fiscal year. Thank you very much for your time.